So we're going to dive into kind of a high-level overview of SBA financing. We're going to start with the basics. We're going to talk about the different loan programs. The SBA overview does not make the loans. They created the policies around it, and they guarantee a portion of the loan. There's not a one-size-fits-all. Some people find amazing businesses that are non-franchised. Some people prefer franchises. Some people start from scratch. And the beauty of SBA, it can fund all of the above and more. If you're serious about buying a business, our goal is to help 10,000 aspiring entrepreneurs become successful business owners over the next 10 years. All right, so thanks everyone for joining How to Get SBA Financing to Buy Your First Business. I've been in the lending industry for 26 years. About 7 years ago, I really got interested in SBA financing. And so the SBA doesn't make the loans, they guarantee a portion of the loans. I believe that these are the best loans out there for anybody in the business realm. Whether you own an existing business right now, you want to start a business from scratch, you want to invest in a franchise, you want to buy a franchise resale, you want to do a rent replacement deal, meaning you own a business right now and you're paying rent and you go and buy a building, as long as you occupy at least 51% of the space, potentially could be eligible for SBA financing. So we're going to dive into kind of a high-level overview of SBA financing. We're going to talk about business acquisition, how to finance franchises, how to finance commercial real estate, what's eligible, what's not eligible. The SBA guidelines, the SOP for SBA, it's several hundred pages and it's always being updated. Recently, they've made a lot of good updates. We're going to go through 2 case studies, just kind of high level of things that we've able to accomplish, and hopefully it gets your mind working, because you can be extremely creative on how to finance these businesses. Typically on a business acquisition, you can finance 90% of the total cost. That's purchase price, build-in working capital, employee salary for the first few months. That's your total project cost. We can finance up to 90% on a business acquisition, assuming that the financials of the business can support the debt payment of the new SBA loan. So that 10% equity injection, we're going to get into it. That a portion of that can be seller carryback, so they can carry back typically about 7.5% of that on full standby, meaning no payments for the first 2 years, and you can come in with as little as 2.5%. So just kind of what it would look like is, on $1 million business acquisition, there would be a $900,000 bank loan, or SBA 7A loan, $100,000, which $75,000 is on full standby by the seller, and then you would come in with $25,000. So we're going to talk about eligibility, because it's not as easy as that. We're going to start with the basics. We're going to talk about the different loan programs, the SBA 7A, the 504. We'll also talk a little bit about other government guaranteed loans like USDA B&I loan. That's for businesses that are in rural areas with populations of less than 50,000. We're going to talk about the decision-making process and eligibility. So here's just a case study. It was a marina and a restaurant. The acquisition price was $2.1 million. The seller agreed to carry back 5% on standby, which was $105,000. We needed about $140,000 to close. The problem was that the borrower had just recently bought a short-term rental and his cash was tied up. He made good income on his W-2. He had great credit, but he was low liquidity, and this deal kind of fell on his lap and was pretty close to him. He knew about this marina and restaurant. He liked the area, he liked the business. So he was able to, with the help of myself, find 2 investors. They each put up $50,000, and they own 19% of the business. And then he was able to get a family member to put up $40,000, who now owns 14%. I think the guarantor of the loan owns 48%, and that was with none of his own money out of pocket. So case in point, it's you can create structures. Anybody that owns less than 20% does not have to be a guarantor of the loan. So they don't have to provide their financials. So when you're thinking about how to structure these deals, maybe you have a lot of cash, maybe you don't. And so you can always bring in investor partners. So now the guarantor, he owns the business, he's running the business, it came with a bunch of extra acreage of land. They're working on putting RV pads on. They're looking to put 30 RV pads on, which will produce probably about $250,000 in top line revenue. And then they'll look to probably refinance into a 504 loan. So this was a 7A. So as you can see, you can be quite creative on how to structure these deals. The next was a franchise. It's called Mr. Handyman. It's a handyman franchise. And this is a low startup cost franchise. We talk about total project costs, which would be franchise fee, working capital, money for the lease for the truck, a couple months of employee salary, marketing costs. So the total startup cost of this franchise startup was $150,000. The problem is that they were low liquidity. So most banks want to see at least 10% post-close liquidity, or if not more. And most lenders will do 80% on a franchise startup. So anyways, they had worked with a national SBA broker, and they basically turned them down and said, you don't have enough liquidity. Our team was able to find them 90% financing, 90% of the total project costs. They needed to come in with about $15,000, and this bank in particular isn't necessarily concerned with post-close liquidity because they built in $40,000 of working capital. So here's somebody that went from W-2 world to owning their own business, and this is what we do day in and day out. We help people find businesses, and we help people fund businesses. So I'm glad you guys are here. I'm trying to give you a broad overview of the capabilities of the financing to kind of get your mind to understand how SBA works on a high level. And there's a lot of questions, I know. We'll try to dive into them as we continue. If you go to the next slide, please. The SBA overview does not make the loans. They created the policies around it, and they guarantee a portion of the loan. So anywhere from, depending on the loan amount and the product, there could be a guarantee of 75 to say 85% guaranteed. So these banks, these credit unions and non-bank SBA lenders, they make the loans, and then the SBA guarantees a portion of them. So the lenders that make these loans, they all interpret the SBA guidelines a little bit different. That's why you can go to one bank and they'd say no, and then you take it to another bank, the same deal, and they would say yes. I had a gentleman who wanted to start a laundromat. This was a non-franchise startup, and he didn't have any experience in laundromats. The total project cost was around 1.2 million. And a lot of banks don't like laundromat startups because they're a little bit more risk to them. Additionally, the loan he was requesting was $1,022,000. And when loan amounts are over 500,000, the SBA guidelines say if the loan amount's over 500,000 and there's additional collateral, meaning the borrower had a home or rental properties, they would look to put a secondary lien on those to make up for the collateral shortfall. So on anything without commercial real estate, there's always going to be a collateral shortfall. So just remember, if the loan amount's under 500,000, they're not going to look. It's not a guideline for them to put a lien on any of your property. If the loan amount's over 500,000, then they have to look for additional collateral. Now, if you don't have additional collateral, that's fine. It obviously strengthens the deal considerably if you do. But this gentleman had sold all of his real estate and didn't have any real estate. And so it was kind of a high risk deal. But we were able to find a bank that made a loan of 85% of the total project cost. So it is very achievable to do, more of these high risk deals, even if you don't have the collateral. And that's the beautiful thing about the SBA. So what we do is we work as an advisor, or maybe you call us a broker, and we figure out the deal, and then we figure out which bank or non-bank SBA lender would be appropriate to get it done, because they all have different guidelines, even though they're underwriting off of the same SOP. So now there's changes. We have rules now. Before, you couldn't do partial buyout. So now, today, you can actually go in and let's just say a seller is getting towards retirement age. They want to stay involved. You can go in and buy a portion of the business. They can own less than 20%, leave their equity in the deal, or some of it at least. And then you can go in and buy the majority of the business, and then they own less than 20% and they don't have to guarantee the loan. So with so many baby boomers turning 65 every day, there's a huge opportunity. Many of us out here probably watch Cody Sanchez on YouTube, and she's talking about the boring businesses and so forth, which is true. Like there's a tremendous amount of opportunity in business acquisition. Sometimes you can do these partial buyouts, and that sometimes will work in your advantage if you maybe short on capital. So that's called a partial buyout. So the real key benefits, these loans that are made, these SBA 7A loans, you're not going to get this type of leverage anywhere. You're not going to get these guidelines anywhere else. And it's really because they've got a big guarantee. Now, don't get me wrong. The banks that make these loans, they make a tremendous amount of money on these loans. Most of the banks, what they do is the guaranteed portion, that 75 or 85%, the day the deal closes, they actually sell off that guaranteed portion and they make a very big premium. So it's not all about good for society. I think with the banks, they make a lot of money. So don't, that's why they're in this business. Let's not get that wrong. And it's understandable. But for us as potential borrowers, being able to utilize the SBA 7A loan, it can really help us, whether you guys are out there that you're in your W-2 job right now and you are looking to find some sort of business that's semi-absentee, meaning you can still keep the W-2 job. I don't know if any of you have attended any of our other workshops, but I oftentimes bring in a CPA, and really, when you really understand like the tax code and the advantages of being a small business owner, that you can offset a lot of the earned income through your W-2 or your day job. So there's like huge benefits. I usually talk to people about that. Look, I'm not a CPA or a tax attorney, but this is the stuff that I recommend everybody look into is like, what type of business am I capable of running based on, what I have available for liquidity, and time and lifestyle. And then we hone in on, and that could be maybe a vending business would be appropriate for you, or maybe you have a hybrid work schedule and we can plug you into some sort of boring home service business, or potentially a franchise. So that's what we do. We have to understand. I get a lot of calls, and I think a lot of people have the intention of buying a business, but it's overwhelming. And that's why I think sometimes franchising is the easier route, because it's systems and processes and marketing, and brand. And so, that's why I tell everybody that I talk to, look, continue looking for businesses, but also look at franchise resales and look at franchise startups, because it's sometimes easier to structure, and they have systems and processes in place that may help you make a better transition. There's not a one size fits all. Some people find amazing businesses that are non-franchise. Some people prefer franchises. Some people start from scratch. And the beauty of SBA, it can fund all of the above and more. We've kind of talked about some of this already. Business acquisition, I'll recap, 90% financing based on the cash flow of the business. Here's an important fact, guys. Whenever you're looking at a business, step one is, once you find the business and build rapport with either the listing agent or the business broker or the seller, you're going to want to get the financials. And so we underwrite off of the businesses or the seller's business tax returns. We always want 3 years of business tax returns and the year-to-date interims, along with a balance sheet if they have that. So like step one is, in my opinion, let's just say, hey, you got good credit, you've got a little bit of capital, you've got good outside income, you're probably going to be financeable. But really, the first thing I always tell people is, once you identify that business, before you put LOI, letter of intent on it, or letter of interest, is let's see if the thing cash flows from a SBA underwriting standpoint. Plus, that's great. That's great initial diligence to do, is because, look, if it's not cash flowing, there might be a story behind it that we can overcome, or maybe it's just a business that's not going to be fundable at that price they're looking for. So without having you spin your wheels, let's start there. Because I have a lot of conversations and people are always, what about this? What about this? What about this? And quite frankly, the easiest thing to do is get the financials, because that's going to tell us right there, when we spread the tax returns, we don't just look at year to date, we average and we do a cash flow analysis. Does that cash flow from the business, will it support the debt payment? And we call that debt service coverage ratio. And basically that's what we do in real estate too. When we look at these investor loans for rental properties, will the cash flow pay the debt by about 120%? And if so, then it's viable that it's going to be fundable. So that's step one. And also, instead of you wasting a lot of time, you're going to quickly know if the business is fundable, because unless you have the cash or you can get the seller to finance it, then you're going to need SBA financing. And if it's not going to cash flow, then now a lot of times what we do is we do a combination of SBA financing with seller financing. So we can structure deals that maybe the seller is getting older and the business is not running because they're not paying attention to it. So sometimes we can tell stories, and then we have to look at what I call compensating factors. A compensating factor is there's real estate in the deal, so it's collateralized, and there's a lot of equity on the upside of the real estate. Or the compensating factors are that you have extremely a good amount of experience in that industry, or you have a lot of money, or you have a lot of collateral. So there's always a way to figure out something, but really we got to start with the cash flow. I think that's the most important part to start with on a business acquisition. SBA loans, the 7A loans, they're super versatile. We can actually, if you're looking at a business that's say $10 million, we can actually do a conventional loan with an SBA loan and get proceeds up to $7.5–8 million. It's called a pari passu. So that's a possibility if you're looking at a business. But loan amounts on the 7A are capped at $5 million. With real estate, if real estate's like the majority, if it's like a self-storage facility, then and that's what you're buying, that's going to be amortized over 25 years. If there's no real estate involved, then it's going to be a 10-year term. When a loan is amortized less than 15 years, there's no prepayment penalty. Any loans that are over 15 are going to have a 3-year declining prepayment penalty. It's a 5% penalty the first year, 3%, and then the third year is 1%. The SBA 7A loan is based on Wall Street Journal Prime, which today is at 8.5%, plus a margin, typically up to 2.75%. So on a normal SBA 7A loan, the worst case scenario for a rate is 11.25. Now, if there's real estate involved and it's a really good deal, I have banks that will lend out at will do a fixed rate option. They'll do a 5-year fixed at somewhere in the 8s. So that's for a deal that's got collateral, and not all banks will do things like that. But that's part of what we do to try to uncover what the best route is based on the deal, because everything is unique. But if there's commercial real estate involved in the business, the other thing too, if you're buying a business that has real estate, when you're writing up a purchase contract, the important thing is what's the purchase price of the business and what the purchase price of the real estate. That actually, by knowing those factors, that helps us determine what the bank's going to underwrite for amortization, or how long of a term they're going to give. So if the majority of the acquisition is based on the real estate, then you're going to be able to get a 25-year term. If it's not, then your term is going to be some sort of blended term, or they're going to do 2 notes. The application process, it varies by banks. I'll tell you how we work. 95% of the time, if not more, we don't charge a fee because we get paid a referral fee. There's 1 or 2 banks that we charge a packaging fee because we don't get paid a referral fee. But that's few and far between, and those are for tiny deals typically. And so the way we work is we have an initial conversation with you. By then you have your business that you're looking at. You have the financials typically. And what we need for an initial package, you've already gotten 3 years of sellers' tax returns, year-to-date interim, and the balance sheet. And now from you, what you could get ready is there's an SBA form called Form 413. That's an SBA personal financial statement. So we got to get that filled out. That has your assets and liabilities just from you personally. 3 years of personal tax returns if you're W-2 to a recent W-2 and paycheck stub, a resume, and that's really what I need to get the deal to a term sheet. So a term sheet is basically, it's been scanned for eligibility and initially pre-approved. Usually we can turn those around in a few days, if not 1 or 2 days. And then from there, you're going to get a full needs list of everything you need to submit for an actual loan commitment. And without real estate, these loans, unless it's a small SBA express type of deal, we can get those done in 3 weeks. But a business acquisition generally going to take 45 to 60 days. If real estate's involved, it could take as long as 90 days. And it's because with real estate, you have to do an appraisal and you have to do a phase 1 environmental. So anytime you buy anything with commercial real estate attached, just know you're going to do a phase 1 environmental. That's where they test the soil, do reports, make sure there's no contamination. The next program is the SBA 504 loan program. The 504 loan program is 2 loans. It's a senior loan and a junior loan. The junior loan is actually the guaranteed portion. There's 2 underwriting processes for the SBA 504. There's the bank piece, and then we actually have to send the file to the CDC, who packages up a file and sends it to SBA. On an SBA 7A loan, I forgot to mention this part. On an SBA 7A loan, we typically work with what's called a PLP, a preferred lender. And if they're a preferred lender for SBA, they underwrite and draw docs and do everything in-house. They don't send the file to SBA. So we typically work with PLPs on the 7A. And then on the 504, we typically work with banks that are good at 504s, because most banks are doing the majority of their business is 7A. So you need kind of a specialist on the 504. The 504, I'm just going to use a $1 million example. So this is the 504 is only for real estate and heavy equipment. It won't fund a business acquisition with no collateral. That's what the 7A is for. Now, the 7A can do a lot of what the 504 can do, and it can also do a lot of what we mentioned before, business acquisitions with no real estate and things like that, and startups. So on $1 million deal, you have a $500,000 bank first, and then you would have a $400,000 second, and then you would come in with a $100,000 equity injection. So you can get to as high as 90% leverage. On a 504, if it's a startup, you take a 5% haircut. So if it's a startup, you're going to get 85% leverage. And if it's a startup and the real estate is considered special purpose, like it's only got one unique purpose, then you're going to get 80% leverage. So those are like first thing I check is that the amortization on a real estate deal is 25 years. On the junior piece, the second, and the first can be anywhere from 20 to 30-year amortization depending on the bank. And so these take a little bit more legwork because there's 2 underwriting parts. The advantage of the 504 is it's a little bit cheaper debt. The second, so the deal funds, the bank funds the first and the second. Then after the funding happens, the debenture happens. That's when the loan gets sold off. Once the loan's basically sold off, the second loan becomes a 25-year fixed rate. Today, that's at 6.2. The senior loan, the $500,000 loan, that is negotiated at bank level. So a lot of the banks might be prime +1. So you're 9.5 on the first, 6.2. You got a blended rate somewhere in the 7s. It's all negotiable, and all banks vary, and it also depends on the type of deal itself and the guarantee and the strength of the sponsor. We call sponsors or borrowers, same difference. So that's how pricing is determined on the 504. There's a lot more to the 504, but essentially with a 504, you can do deals as big as 25, 30 million potentially, because the first loan could be 8, 10, 12 million dollars. The second loan could go as high as 5 million. Although there's a caveat, which is called the SBA 504 Green, which opens up the door to a whole lot more of excitement, where you can have $35, $40 million in buying power. Let's take a quick break into questions. And I'll start with the ones we had. We had some questions beforehand that came in. I'm seeking funding in the range of $450,000 to $550,000 for my existing towing business. While our financial records over the past 2 years do not reflect significant profits, we are on growth trajectory with our current operations. At present, we operate 1 truck that generates approximately $8,000 in monthly revenue. To enhance our service capabilities, expand our business, I am looking to acquire an impound yard. So great question. Thanks for the feedback. So your financials today are not going to really justify. You're probably writing a lot off, and now you want to buy a yard to grow the business. So I would first want to know, like, what compensating factors do you have? Like, how can we tell this story? Because, like, if we tell a story of your tax returns, it's going to say, well, why is this guy expanding? He's losing money. So we have to tell a good story, and then we have to look at, other compensating factors. Do you have liquidity? Do you have any real estate holdings? All that kind of stuff. Not the easiest deal because you've been in business at least 2 years, and so your tax returns are probably not showing that great. So this would be a harder use case scenario. But I think if there's a justifiable account and you look good on paper on your financial statement, your Form 413, there's possibility. Definitely be challenging, but I would definitely like to have a conversation with you, and you can go to at the end of it, we'll give you my link and we can talk about the deal. If I can't help you right now, I'll give you some good advice, or perhaps we can figure a way of scaling and then coming back in a few months or a year. And then maybe if your business is doing much better now, we can tell a story why it's doing much better. So definitely not the easiest deal, but it's worth taking a look at for sure. All right, next question. I have a real estate investment company where we purchase single family homes for rentals. Can I get an SBA loan that would help cover the down payments? Unfortunately, no, you can't. You could, though, buy a property management company with SBA financing. So if you want to own a property management company, SBA financing would be good. Next question. Nonprofits, will they be considered for SBA loans? No, unless you have a for-profit division. If you have a for-profit division, then you can get an SBA loan. If you're in the state of California, we have a program there called the California State Guarantee Program, and we can help nonprofits if you don't have a for-profit. So if you have a for-profit, then yes, we can help you. If you're in California and you don't have a for-profit division, we can help you with the State Guarantee Program. There might be, and depending on the state you're in, there might be other programs similar to the California State Guarantee Program. Range of interest rate on the SBA loans. So on the debenture rate on a 504, it's at 6.2 today. On a SBA 7A, it's Wall Street Journal Prime plus margin. Wall Street Journal Prime's at 8.5. Margins go as high as 2.75 on normal size SBA loans. And if there's compensating factors like real estate involved, you could have a rate in the mid to upper 8s today, but some of the deals are as high as 11.25. I want a small loan around 20 grand. How long would it take? I don't do microloans, but you can go to the SBA website. They do microloans. They have a list of microlenders. I'm not an expert in microloans. I deal with loans that are usually 100,000 and above, so I wouldn't be the best source for you. But there are micro lenders out there. Typically, they're some of the CDCs out there, and the SB whatever, Small Business Development Corporations. They offer programs and different things for the smaller deals. Sorry, I couldn't be of more help. How long does it take to go through the process from start to funding normally? Can you use the funds to pay off debt that was used to fund part of a startup? Yeah, I mean, we have to do what I normally do on those deals is get a debt schedule from you, and then I look to see what's eligible. But if it's eligible debt, we can consolidate that with a SBA 7A refinance. Just depends on the eligibility, and I don't know because you didn't give me what those debts are for, obviously. But typically, we'd start with your financials for the business for the last 3 years, debt schedule, Form 413, financial statement, and then we'd see what, and then we could potentially, if everything worked out, we could build in working capital also if your financials justified that. Do you help start up with the real estate? Do you help startups with the real estate? Yeah, potentially, yes. You can get, if you're going to occupy at least 51% of the space for your business, then yes, you could get financing for a real estate startup. But if you're talking about, I'm a real estate investor, I'm trying to buy single family homes, that's not eligible. That's an investment. 2 questions. Are there SBA benefits for women-owned businesses? Can SBA loans be obtained in a subsidiary of an existing business being the investor? Let me just first start by there are, if you check SBA's website, there's a lot of advantages for minority-owned businesses and you can get certified. So I would look into getting certified. But that doesn't really help rates and pricing and getting the loan approved. It helps maybe getting government contracts, typically, from what I see. And can an SBA loan be obtained as a subsidiary of an existing business being the investor? At the end of the day, whoever owns 20% or more individual of the business would need to guarantee the loan. So as long as there's a guarantor that can weather the underwriting process, then yes, that would be feasible. You could have a company be the investor, but somebody has to guarantee the loan. So anybody that owns 20% or more has to go on the loan and be a guarantor. You're signing personal guarantees. Most bank debt, you're signing a personal guarantee. Most anything with credit cards, typically you're signing a personal guarantee unless it's non-recourse, which is far and few between. What's the average interest rate of an SBA loan? I already kind of covered that. It's going to vary. What is the minimum good credit score? Great question. So just rule of thumb, 680. Well, some banks and some non-bank SBA lenders have different thresholds. I say 680. On loans under 500,000, we use something called the SBSS credit scoring system. That was designed by FICO for SBA loans, and that's from 0 to 300, and you have to score out between 145 to 155 or better. And so if you don't score, you're not going to get the loan with the bank. They use that scoring model for small SBA loans. Most of all banks use an SBS credit scoring model or a very similar scoring model for loans sub 500,000. Generally, you need a 680 credit score though. Some 660 is fine. I have a real estate business LLC and I haven't been able to find funding. Where should I start? Well, you're not going to get if your business plan is to invest in real estate, you're not going to get SBA financing for it. If your business plan is to own hotels and an actual business, then you could get an SBA loan to buy a boutique motel, to buy an RV park. That is SBA eligible because those are businesses. When it's deemed an investment, it's not eligible. Like what I see a lot of, like short-term operators, like I'm a short-term rental operator and I've been doing single family homes and now I want to step up and I'm going to go buy a boutique motel. Is that SBA eligible? Yes. Are single families eligible? Typically not, unless it's like some sort of residential assisted living. That's eligible for SBA financing. So I don't know if I'm answering your question correctly, but you're not going to get like down payment money for investment properties with SBA financing. We are looking to buy a bar cafe in New York City. Mostly the price is goodwill as compared to assets on balance sheet. So guys, great. I'm glad you used a great word, goodwill. That's basically, there's no real tangible value. It's intangible. Goodwill. We talk about a lot in our realm, we call it airball. There's no collateral. It's goodwill. Most of the price is goodwill as compared to the assets on the balance sheet. How much loan can I get to buy the business prior to price is approximately 200,000. So the real question is, get 3 years of business tax returns and year-to-date interim and balance sheet, and what will the cash flow support? If the cash flow supports the purchase price, then you're going to get 90% financing. It doesn't matter about the value of the collateral. On amounts under 500,000, don't look for additional collateral either. So even if you had collateral shortfall, you're okay, assuming the business made sense, your resume made sense. Would a recently established or acquired business qualify for SBA financing? Potentially, yes. I have one right now that hasn't opened its doors. It's a restaurant, and I believe I can pay off an existing SBA and get him more capital. But there's a story behind it, and he has enough of an equity injection into the deal. As long as there's enough equity injection and is eligible. In order to do an SBA 7A refinance to another 7A, you have to have a reduction in debt payment of 10%. If we achieve that, then it's eligible for a refinance if you had an existing 7A, SBA 7A into a SBA 7A loan. Partial buyouts, I think we'll have to do another topic on this. I talked about it earlier. Basically, seller wants to start slowing down a little bit. Maybe you talk them into staying in the business to help you run it for a while. They go from being 100% owner down to a 19% owner. They don't need to be a guarantor of the new SBA loan. The percentage of loan is based on the percentage of ownership that you take, and you come in with 10% equity injection, and you can own a portion of a business, and that's a partial buyout. And that just changed about a year ago. So now you can do partial buyouts. Before you couldn't. Great to know as you're talking to sellers, different ways to structure deals. We talked about this already. If you own less than 20% of the business, you don't have to go on the loan. Anybody above 20% is going to be a guarantor of the loan. 504 use cases. We've already talked about the pros and cons. 7A can do real estate, can do goodwill, intangible. 504 is just going to be real estate or heavy machines. And 504, we can do deals up to 25 million. 7A, 5 million. You can do a conventional loan with it, so you can do $7.5 million loans. So you could do, purchase of an $8, $9, $10 million business. 504 can do bigger loans, but it's for real estate, essentially. We already talked about eligibility to a certain degree. I think we could kind of move forward on that. Application process. Just essentially, I talked about what we need on business acquisition. Startups, you're going to have to really good business plan on a startup. 3 years of projections, first 2 years broken down month by month. I help you through this process. I help you find the right bank or credit union or non-bank SBA lender. So really, to be ready for a startup, you should have your business plan ready and your projections, and then you could book a call with me. If you don't have that ready, you should wait. But if you have general questions, I'll still, have a call with you just to get you set in the right direction. It's just hard talking generals, like if I understand what type of business you're starting and like where you're at. But generally, you should have good credit. You should have good outside income that covers your outside expenses. You should have at least 15 or 20% of the total cost of your startup, because you're going to need a 10 or 15% equity injection, and you're going to need 10% post-close liquidity. So if you have those factors, then financing is definitely possible. Next slide. We could skip this one. We already went through some case studies. Common challenges, credit issues. Insufficient collateral is not really a problem, depending on the deal, because there's a lot of lenders that will do these goodwill deals with no collateral, with collateral shortfalls. Key takeaways. SBA funding is amazing. There's a lot to it. I couldn't possibly cover it all in 1 hour, but if you're serious about buying a business, our goal is to help 10,000 aspiring entrepreneurs become successful business owners over the next 10 years. I actually want to change it to 100,000, but I'm going to say 10,000 for now. But if you're serious and you want to, start a business, buy a business, invest in a franchise, I think our team can help you. There's a lot of variables, but I think when it's specific about what you're trying to do, we can help nip it in the butt, give you good advice, whether you're ready or not today. We can point you in the right direction. We can also help you identify an ideal business. We use like a DISC profile, but we call it a business assessment. And that actually helps us pinpoint the best business models for you. And also, we also need intake on that. Like, are you going to keep your W-2 job? What do you do? What's your time level? Or, will your spouse be involved in the business? But anyways, if you want to find your ideal business or fund your ideal business, that's where we can help. That's what we can do. So if you have any questions right now, and guys, this will be for people that are serious, that have questions. Maybe you don't have a deal under contract, but you have like questions and you have intention to actually do something. You can go to bookwithbo.com and schedule a call. For people who want to buy a business in the next 60 to 120 days, invest into a business in the next 60 to 120 days, you can go to this link, businessownershiplaunch.com/go. I'm going to businessownershiplaunch.com/go. Do the intake and, the business assessment, and then you can book a discovery call. We'll help you find a business to invest in the next 60 to 120 days. We'll help you figure out your financing ability and get you all squared away, and then show you some different business models that we think might be a good fit for you. That's our goal. We're going to send an email out to everybody. It's going to have the links. You can write them down now just to have them, because maybe it goes into spam. I don't know. Hope you guys got a lot of value out of this. I know it was kind of a rapid fire for an hour. Go to our future events as well if you want. But like I could tell some of you are already looking to invest in a business and move forward. So just go to businessownershiplaunch.com/go. And our goal is to get you into business within the next 60 to 120 days. And we can do it. Thank you so much for attending. I hope you got some value out of this. And look forward to connecting with all of you. And I'll see you soon when you book your discovery call to do your, after you do your business assessment. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.